Hello guys, glad to have you on board again today. We do just as we did yesterday. We still repeat the same things once and for all. It's not going to change. It's still the same strategy. It's just by repeating it each and every day. That might sound boring, but that's how you learn how to get to replicate my strategy, at least taking inspiration of it, personalizing it to your needs, taking what you can take out there and just walk yourself away from that. Okay, it's just don't follow me blindly. I'm not a trading guru. I'm just a guy you could learn a few things out of and then just move on. Okay, that's really important, just to stay awake that and be aware that this is not just here that you are going to become a trader. Okay, you have to remain open-minded and get your informations elsewhere as well. Okay, that being said, now we jump into the technicals you are here for. Regarding the Bitcoin, not a lot of new things regarding yesterday's video. Yesterday's video was pretty extended one because on Mondays we set up the scenarios I forecast to eventually trigger during the week. Now that we have those already in place, we can all we have to do right now is just see which one are eventually triggering, which ones are trying to invalidate or things like that. So this is basically what we're going to do today. So regarding the Bitcoin, nothing new since what we said yesterday, which means high probability to find a range in here. Still too dangerous for the bulls to try making an entry. They really need to wait for that breakout to terminate, meaning that they need to find out the new bearish cycle in here and terminate it with a taking profit pattern. In terms of technical cluster, this is where I think bulls can forecast eventually searching a bullish entry. I mean, near that price in here. Where we have an interesting bullish cluster, but really requires that breakout to end first in order to get to buy that price with very low risk, at least limiting the risk enough to consider speculation viable. For those who would like to make sells, I think we have an interesting selling cluster in here to be traded only if the blue cluster hasn't been tested yet. I mean that first, in order to sell that price, you want the price to go there before going there, all right? Otherwise, it might be a little bit more dangerous to get in here and trade it, or at least you will really want to have a clean double signal in here to trade it safely if you want to do it. So that's it about Bitcoin and cryptocurrencies in general. Nothing much to say about what we have right now. In terms of technicals, it's basically don't be a seller right now. Don't be a bullish right now too early. It's basically waiting and see how long it takes to reach out the technical clusters in which trading can be interesting. And it might take quite some time. Just take last week's example. We basically spent half, not to say more than half of the week doing literally nothing, and we could very well do the exact same thing during that week. So don't think that volatility is necessary into a market. It's absolutely not the case, and we could very well killing the volatility once again and just don't move for a little while. So don't be too aggressive, don't put too much leverage, remain very short-term trading. Don't expect the market to make very dynamic candles like that all the time. The more we get ahead in nearing the end of the market crash, the more the volatility will drop. Okay, and be aware of that and bear that in mind whenever you are trading. We are now at the end stages of that crashing market, which means we are now returning to normal values, normal state over a market, which means lower volatility is now becoming a standard. Doesn't mean the market will terminate the crash right now, but the fact that we're having low volatility periods of time is now normal, and you have to deal with it, okay? Otherwise, you're making mistakes in the way you identify the market you're trading. So that's it for the cryptocurrency. So those who are just interested in it can stop the video right now. Those who aren't, you can stay in, and we're going to cover up global assets in that review. And of course, the big of a deal still is around the US equities. Today we've got major catalysts and tomorrow as well. So we've got really a big deal going on, and investors are going to anticipate, and we're probably going to have a market posture changing. It means the market probably is going to at least have all the ingredients in order to create a market swing. So it's not necessarily that the market is going to reverse. Absolutely nothing like that is certainty. But we can forecast high probability of the market taking a stand in here. So it's either we're going to break resistances and keep on doing it for an extended period of time, and that's what probably creating some kind of bubble trading, because the economy is not following us in here, but we can still do it. Okay, market can remain irrational for a long period of time, and if you try to fight that, then you're going to get into nasty troubles that you don't really want to be into. So if somehow the bearish scenario is invalidated and has to trigger stop losses, then that's how the game works. When you speculate, you're no god. You have to accept being wrong. And if that was to be the case, then of course I won't fight it. I'll just give away my stop losses and be patient, waiting for my time to come. As a bear, I will obviously have my time to come, and it could be in a couple months, even in a semester. I really don't know, but anytime my time will come, I'll get back into trading that market, as I've been taking a clear stand. I'm no longer buying equities on the current pricings. I'm doing it if we drop 10 to 15% valuations. I can consider making bullish entries, but that's the only solution for me to buy that any equity market at the current stage. All I do right now is selling or waiting. That's the two only options I have. I'm taking selling because I still have bearish signals, but if they got invalidated, if they went to be invalidated, I will of course step away from that market, let the bulls take over for an extended period of time, but then I'll get back in whenever this cycle will be terminated. Anyway, so let's get some graphics in here in order to express that view. So to me, most interesting thing right now, I think volatility is now returning to making higher highs. We've been making a very strange thing in here because we've made higher high and then made lower low. So volatility is literally stupid at the moment, but I think we keep on doing this, which means after making that lower low and that third and probably final manipulation, we are probably going to break resistances, not necessarily going to the moon, but I think at least heading toward 21, which means probably going to break supports one by one. 21 is a risky level on volatility, which means regarding the high pricings of the SPX, if VIX is somehow getting higher, I think the equities will basically fall apart, at least surrender some of the gains, some of the recent gains, and return probably brutally towards the supports area that are lower, far lower than what we currently are. So first support area to me in terms of SPX is right here, where we had the previous market top. So you can consider this as an interesting price level that you need to have on your charts. It is 27.32, for example, and consider this as a price area. Don't take that price for a single price, okay, but consider this a price area. So right here, I think first support, we also have technical dynamic support out of that trend line. So I clearly see that we have a bullish cluster in here. The market is obviously going to test. We now finally have it. We've got the taking profit confirmation onto our short time frame, which means we terminated that wave. Probably be aware that this is a taking profit, so don't be too aggressive. Price can still go slightly higher, but normally we terminated. It means that this is the final cycle. So the sellers should be back in the game pretty soon. At least I hope to see them doing it. So if we fail in here, it's obviously 1, 2, 3, 4, 5 as a wave structure, which is a wedge structure. If the market is collapsing and exiting by the bottom, then we will have probably a bearish confirmation. First support back then, after that will be in here, really big support in here, and obviously the bulls will do anything they can to hold it. So be aware that there will be dangerous supports below the current prices. So don't think the market is obviously going to fall apart. They're probably going to have some fight backs in the early stages of the bearish reversal. And if we manage to break all those supports, then I think after that, we'll have a falling apart market. Okay, it's only whenever we'll have done this And the goal will be to slip below this, will be a very, very great bearish reversal signal. But this is how I see things plotting in the next following days. It's either the market's falling apart, we make wave 1 extended, but not necessarily going to be the case regarding 31. If we get volatility only to our 17 to 20, I think this is how we play it. Meaning the market will have visibility out of what's going to happen. And as I said, second option is market is falling apart, volatility reaching out 30 or more than that, and there we have extended wave 1. But for now, being patient is the only option. I still forecast the market to make A, B, C structure right here. So really, really don't be too aggressive. Remain speculative. The market can go higher than that, and it's not necessarily irrational. Okay. Now we have to talk about the SPX. Okay, the cash index has been surrendering the gains at the end of the session. We've been closing at the low. Okay, not closing at the lowest low of the session, but we went down, retracing to open price at the end, and basically the session was bullish until the latest minutes in which all the bears entered lately, which means we've got bears in that market. Right below resistance, we've got taking profit patterns triggering in multiple time frames. It really is dangerous. And if you have a look at the SPX structure in terms of cycles, we're in an exit cycle right now. Really not something the bulls would like to avoid seeing. It really is important for the bulls to assess the fact that now the risk is really picking up. And if you've been bullish of that market, then you should really consider taking at least partial profits, if not entirely. That will be my recommendation. Even though I'm not doing any recommendation, that's a false flag in here. Okay, I'm not telling you what you guys should do. Just assessing the risks. This is why this is what a trader does. So I think bearish signals today. I'm already maximum leverage on my speculative trades, which means I cannot reinforce position right now. The only option I have is to wait to have price confirmation, meaning that until we manage to break down a support, and the first support is obviously there, until we manage to get lower than that, I cannot do anything with the SPX index, meaning patience is my only option right now. All I'd like to see is the market collapsing and VIX exploding, and obviously gold being bought as well. That's the scenario I've been showing you guys yesterday. I've been sharing this. I really don't know how the fuck we managed not to break that up until that, but somehow, once again, invisible end is at play. Whenever we have risk, somehow the invisible end is coming over and basically killing the volatility, or killing any chance to see the market falling apart brutally. It's like anytime we get to risk, something prevents us from seeing that risk happening really in the market. But at some point, this game is going to be over. At some points, that invisible end is not going to show up, and lots of traders are going to be surprised not seeing that usual thing. They get used to it. They're now getting used to the fact that anytime something seems to go wrong, somehow it's then going well. At some point, this is not going to work, and everyone will be really surprised to see that things are getting dirty, and at that point, the invisible end will not be there to support prices. And whenever that time will come, you can be aware that nasty things will probably happen, because this is what we call a market manipulation. Okay, it's not normal market to see an invisible end, always assessing the risk and limiting the dangers and things like that. At some point, we're going to gather up all the dangers we've been narrowing, and they're all going to explode to our faces. And whenever that time will come, and then dangerous things will get down, and we'll have to watch out for volatility. Okay, so it really is the market apparent calm isn't normal, and it can last for a long time. But anytime this pattern will terminate, we'll have nasty things down the road. It's just a matter of time. And as I said, dropping 10 to 15% is just the minimum to just getting back to normal values and normal levels after manipulating that market for an extended period of time, meaning manipulating throughout volatility. So this is always the same quartet. We've got the US indexes going high, got VIX dangerously low, we've got gold on support for an extended period of time into an very interesting risk-reward ratio area in which we should have lots of buyers, and for some very stupid reasons we're not doing it. It means that everybody should buy right now. We can clearly see that we've got buyers, but for some reasons the market is not moving higher, which is abnormal, which means we still have heavy sellers on that market probably, but at some point, and you see that pattern is already triggering. We've got volume picking down, which means we're going to have the decision closer somehow. It's either we're going to fuck up all the bulls, stop losses, mine included, and as I said, if we're going down, I'm ready to give away my stop loss. I'm not going to hold my trades on gold. If we're going down, can be dangerous, and I will eventually buy lower prices later, but I don't want to keep that trade open if the prices are sharply dropping. What I expect on the opposite, of course, is to have a very brutal bullish activation in which I'll get to reinforce my position if we get to reach out to the resistance up here. If we ever get down, ever get up here once again, it's game over for the bears. They will trigger all the stop losses and we'll have a bullish trend triggering right after. Probably something like that, the exact same opposite. The market will bang, explode in a second. Just basically, this was a trap. This is untrapping the market and getting back to normal values. This is what I think is about to come. But once again, what I think is not necessarily what is going to happen. Okay, I need to have signals to confirm that and a technical framework. I do have that technical framework as we exited that bearish trend channel. I do have the bullish signal right now by that signal showing me that the bears might now have exited and we're on support area. So no bears on the support means that right now we should have price moving upward, pure and simple. But that's what the strategy tells me to do, not necessarily what the market will do. Be aware of that, and that's really important thing to get. If we fail that breakout and if we trigger the stop losses, means that the bulls have anything they needed to go higher pricings and they fail it. And if the bulls are failing, meaning that the bears really have lots of control, and that's not something I'd like to see as a bull. So being patient right now on the gold, still speculative. I've been putting some more leverage yesterday, but I'm still into speculative leverage, meaning that I still don't know where the market will go. Odds are still pretty much dangerous, so don't put too much leverage in here. That will be dangerous to step into aggressively right now. Remains a speculative area, which means speculating and leverage are two words that can never be joined. Okay, you always want to keep them separate. Whenever you speculate, you put low leverage. Anyway, Euro-Yen as well is doing very stupid pricing. Why the hell are we back to the resistance? I can't figure that out. But anyway, we're still inside the scenario. The price is trying to fuck us up. And then once again, as long as we don't reach out to the invalidation, I'm in the trade as well. I'm still forecasting the price to break down. Whenever we'll get back to the previous support, which is right here, I'll get to reinforce the positions, which means this is where I get my validation. All right. So getting back there and breaking down that support is my validation level. This is where I put the stop at break-even. Break-even point. So meaning validation is the price in which I'm ready to take reinforcements. If we make candle closes right there, it means that the stop will be set at break-even, meaning I'm out of risks and can consider making another reinforcement eventually, and then I'll get to the final taking profit. Right here, it's just a simple trade. Point A to point B, I'm not taking partial profits. I'll eventually consider making a reinforcement out of the B point if there are clean signals, but generally I'm taking entry in here and exiting right here and not managing the trade in between. GBP USD, I remain bullish on that market. Still waiting for the pattern to terminate. So we've got X. I still forecast one more bearish impulse to come, or waiting to see the resistance broken up. But at that point, I still see the market making one more bearish impulse. So still patient on the GBP USD. Still speculative as well, until either we break a resistance of the X point or we get lower pricings in here and on that support right there, in which I'm waiting with a conditional order to buy that market. So in here I'm buying eyes closed, but for now I wait to see either the price going there or the price breaking up resistances. Remember, we have lots of catalysts down the road on the for GBP and the UK. So it's patience right now to see how the market will digest all those elements. And we already reversed bullish, so anytime we break a resistance, I'm ready to get into to get there and jump in with both feet. For now, patience, because in between the market can be volatile, and I don't want to be caught in those moves. So, the gas as well, bullish on this one, still patiently waiting to see that resistance breaking up. Whenever we'll have that, we will have broken the last resistance we have, which is right here. It's the last time we had volume on the bearish drop, which means if we break that up, there's no resistance until we get there, which is 316 to eventually 3.22, which is my next target. So I hardly see the price going, not going there, and this is my next target. So I still remain low leverage because, as you can see, that market is pretty dangerous to trade, and it can very well go there, trigger bullish entries, and fuck up the stop loss right after it. So it really is a dangerous market, so I stop try trading it very aggressively, but I do have bullish entries on this one. I'll keep them open anytime we haven't reached to that target. Whenever we get there, I'll take my profits, and I don't care about the gas anymore. But I want to take that gain anyway. What may I have missed? Nothing else. I'm still short on Euro stocks, FTSE, GPN, ENG. I'm shorting everything about equities. I'm just waiting to see that damn market falling apart. And I still need to be really patient. Regarding the equities themselves, Tesla, I have an interesting scenario to share with you guys. I'm going to share this one into TradingView today as well. But this is where I'll explain you how I got to the conclusions. Okay, because right now on TradingView, you're only going to have the conclusions. And I strongly invite you to always have a look at those videos in which I'm going to give you the explanation that led me to the conclusions. So this is what we have still. I needed to find a technical framework. So when I get there, once again, I have a bearish bias. I totally admit it, but that's how it is. As a trader, you need to have a bias. I have a sentiment. To me, that thing is going to fall apart. So all I'm looking forward for is bearish entries. I don't care about bullish scenarios. So I have a bearish bias, and I stand on this as long as I haven't been proven wrong. And once again, I can be wrong. I don't care. This is why I call my job speculating, not magically knowing how the market will do and where it will go. I'd never know about that. That will be really stupid thinking it that way. Anyway, so this is what I have in front of me. I'm going to tell you what this is. This is the thing I've been pulling up lately. So as a bear, I'd like to see a bearish technical framework. So the technical framework I can see in here on the context would be this. Basically having 5 bearish impulses, but from what I can see, wave 4 failed to overlap the wave 1. We entered into wave 1 territory right now, which means the only solution I have in front of me is diagonal structure. And as this is the first bearish impulse, this will be a leading diagonal structure. Okay, so that's to me the only solution, leading diagonal structure. And as we can see, the trend lines are not convergent, which means we're in a divergent leading diagonal structure. It's potential. Once again, don't be too aggressive. I'm a speculator. So this is the scenario I'll be trading. Whenever we do have divergent leading diagonal, we're always triggering the same framework, the same rules in Elliott wave forecasting strategy, the one I'm using as a technical framework. So what we do, we generally build up the trend line out of 0 point to 2 points. Watch what I did right. Generally, wave 4 is reaching out to that area, and both a confluent, retracement targets that is generally triggering between 61% at least, 76.4%, which is right here normally, and we can on some rare cases reaching out to 85.6 85.4%, which is right here. It's building us that red area, all right? This is a bigger one, the one I currently see, the overall scenario. So if we take care of the major context in here, if you consider this as being the last support and this as being our latest resistance, if we do trade a range scenario in here, this is where we have a DOM zone, okay? So this is where we would like not to trade. So this is price area in which you don't take entries or exits. It's basically exits need to be done lower than the DOM zone for bears, higher than the DOM zone for bulls. Okay, so it's basically buying that area, crossing air, taking profits in here, selling in there, crossing that DOM zone, and trying your profits, taking your profits on the lower areas. Okay, so consider this DOM zone. I'm going to write it down. We're simply applying strategy in here. Once again, no magic. It's just this is how it is. So this is the DOM zone. This is where we don't trade. All right, we have to trigger a selling entry inside that red area. We'll find out two resistances to trigger that trade. Okay, because remember we always trade prices and technical clusters, and then we wait for a signal to confirm the market saw those prices as well. So we have to resistance by a previous bearish gap in here. So this is the gap open, the gap's high point, this is a gap low point. Obviously in here we're going to find resistance. Then we need to see to make a lower subwave count in order to confirm the A, B, C structure. So right now we're in 2 hour chart time frame. So what we do is finding the technical framework that confirms the context. Our context is trading that divergent leading diagonal. Now we need to find the technical frameworks that leads us to these. So this is how we do it. In divergent leading diagonal, we do ABC subwave structure. We can clearly see that bullish impulse, very long bearish consolidation, and second bullish impulse ongoing right now. So what we do in that case is that we take this trend channel out of this. We need to take Fibonacci channel. So I'm going to use this one and put it right here. Okay, so Fibonacci trend channel is slightly different because it gives us slightly more room to trade. You take the highest close, okay, highest close. I'm going to give you the technicals about that thing. That whenever you trade consolidation, you don't create a simple trend channel. You use that channel and you take the close as reference, the highest close, not the wicks. And then what you do is that you use this 85.4 and 1.13. These are Fibonacci retracement levels. Okay, you take those and it builds you a channel. Anytime we get into that channel is bearish interest area in which normally we can find the C point. Now we find the underlying structure in here. 1, 2, dynamic 2, clearly a wave 3, clearly see the sub-wave 4 in here, means that we're in wave 3. 1, 2, 3, 4, 5. So we terminated the wave 3 probably near the current pricings. Okay, we still have the 5th wave to make. Okay, which means not yet the current timing to get heavy bearish. So whenever this is, what you do is you put an alert above the current market top to be alerted whenever we have high probability to find a wave 5, and then we'll wait for a signal. As you can see, we're in a bullish breakout. So it means that it's not possible to trade right now in bearish side. We need to wait for the market to pull back, trigger the bullish reactivation pattern, and waiting to have what could be a taking profit or an exit pattern triggering right there. If we do have such thing, this is where I'll take maximum leverage to trade that speculative entry. Once again, that's speculative. And validation clearly has to be set above the previous point too, because if we break that up, it means simply that the market is not into a divergent leading diagonal, so we are out of context, and we need to trigger the exit of that trade. So invalidation clearly is there. The target clearly is right here. So pure and simple, that's a very interesting risk-reward ratio. We've got 5.86 risk-reward ratio, 7% risk if you're using a leverage one, so that's too much. No, don't use leverage one on that trade. I think leverage 0.5 is the maximum you can get into this. The potential reward is a 40% drop, which means even with a leverage 0.5, you get 20% net return on equity, which is pretty interesting. And I strongly suggest you guys don't put more leverage than that. That's the maximum you can afford. Don't get into losing too much. That scenario is risky. And using leverage 0.5 means the loss is going to cost you 3.5% of your capital, which is pretty big for a single equity. Don't put all your risk into a single asset. Remember that. It's really important. Even though I think that scenario has very high probability to trigger, you really need to be cautious in here. I've got another scenario as well in NVIDIA, who's been really coming quite close for my selling entry. I haven't been triggered and the entry as well hasn't. But I strongly think that this market is about to terminate. We clearly have 1, 2, 3, 4, 5 wave subwave count terminating, meaning that we might have found the end of that structure once and for all. If we fail in here, if we break supports, this thing is going to fall apart. Next viable long-term support is right here, and this is pretty low. All right, and lots of bulls are going to cry for help if we get there. So I think minimum target is right here, and that is $100 lower. So be aware of that. Nasty things could be down the road. We need to adjust our technical levels right now. Get to the highest level. All right, so new target is right here. 38.2% retracement to May is where we're probably going to terminate the first bearish impulse. We're not going to go straight from point A to point B. We're going to have subwaves, which means this is the final maximum target. Okay, remember once again to have clear sight on what's at play. That asset is bullish. All right, it's pure and simple. So what we do trade is consolidation, is market retracement. So whenever you have a bullish asset, you never ever target more than 38.2% retracement on an initial bearish impulse. So this is the maximum target we'll get. Don't target anything lower than that. That will be totally stupid to do it. All we can do is generally doing this. We can see the upper channel in here, and it's reporting that amplitude to the downside, and it's giving us that maximum target as well. But don't trade lower than that. First taking profit obviously has to be 23.6% retracement. Means that in here you need to have taken at least a first taking profit down that major support. All right. So really, what I will do is not even making it there. I'll make it there, which means my first taking profit on that trade will be there on 14.6 retracement, and this is how I'll play my scenario. Taking profit number 1 and final taking profit in here with a taking profit number 2 on that major support right there. This is how I'll play that trade if it triggers, but for now it's still speculative. We don't have any kind of price confirmation, which means we need to wait to have something to trade. We're in a taking profit pattern, perfectly what we need, but we have no momentum confirmation on the market top, so that market could still very well make one more final push to get to higher pricings, fuck up some bears who've been tightening too much to stop loss. So really, I think waiting right now is the only option, or waiting to have a clean bearish breakout to jump in with confirmed price reversal. That's it for today. Sorry, I'm gonna before I forget about it, we're gonna switch here to get you answering the questions what you might have asked me. Yes, thank you a lot from I Am Learning. Very glad you've been doing this. Thanks a lot for the help you provided. I'm going to give you a like. So if you're ready to do it each and every day, I cannot thank you more for that. I cannot force you doing it anyway, so it's just basically you choose whenever you want to do it or not, and if you want to do it or not, if you have the time to do it. But that's really nice of you. Thank you a lot for doing it. Yes, I've been doing quite a mistake. I actually, the link I've been giving you on TradingView is actually a setup we have right here, so it's a template. But for some stupid reason, I created a double and I deleted the wrong one, which means I've been deleting the one you guys were looking at. So you simply have to update things, and this is right here. Okay, so I'll get you the link into today's description. If I forgot to do it, because I may do it, I may forgot. Then remember this. This is where you get the URL. You just copy paste that into your browser, and you'll be able to see my charts as you did before. Okay. So I'm sorry about that. That's me who've been messing up in here. Okay, thank you for the thank yous. How do you actually trade VIX? I could really find a contract that tracks it nicely. So you have multiple options. Depends what kind of channel you've been using, you will use to trade. I personally use CFD contracts, but I know, for example, in the US, you don't have access to this, but you have access to options. And for example, you can trade the VXI or something like that, and you have also ETF contracts related to VIX. You have to Google things regarding that, because I know there is ways to do it, but I'm not 100% sure about what I've just said. So you have to search for yourself. All I can tell you about is what I do use, and of course CFD contracts is the easiest way, but for some reasons it's not possible for some of you guys. But CFD contracts, basically you buy at some price, you sell at some price, you do whatever, and the broker is paying you the difference between those two at of course the price of a fee. That's pure and simply like that. So I hope I answered your questions. Otherwise, I strongly invite you to get to Google that thing to get the answer you're chasing. And oh, okay, I can see you've been making more than 1,000 views. That's the early stages of those videos. We're just starting this, so it really is pretty nice to see that much viewers. So thanks a lot for the reviews. If you want to help somehow, I really hate doing this, but it just takes 2 seconds to hit that button in here, and what it basically does is the more you hit that stupid button, it's not to get me happy having the most thumbs up buttons. It's not really like that. It's just the fact that the more consider that YouTube is going to create a ratio. Okay, it's going to take the ratio out of the number of views and people who've been clicking the thumbs up out of the overall number of views, and the higher the ratio is, the more the content is pushed to other users, meaning that I'll get into the suggestions in here regarding the higher ranking I'll have towards players versus thumbs up number. So it's just a simple way to help pushing that content to others. I don't really care about having thousands of viewers. That's not what I chase. It's just that if you want to help me, there are several ways you can do it pretty easily. You've got the hardest way to do it, like just learning I've been doing, and really thank you for that. For those who don't have time to do such things, simply take a couple of seconds, click that thumbs up button, and I really is going to be thankful for that. So see you tomorrow. I hope you'll have a great trading day. Trade safe. And all I could say today is watch out for Tesla, Apple, Nvidia, and all those things might be in trouble if somehow the SPX is falling apart today, which is absolutely not necessary. But I still have strong feeling that this is what's going to happen. And once again, I have feeling plus plus a technical framework that suggests I might be right, and I also have the signal suggesting I might be right. So I'm simply applying the strategy in here, and remember that this is not conclusive that the market will do it. It's just that now I know that my risks have been limited enough to take that trade, but in a speculative perspective for now, still waiting to have the confirmation to full come. So at that point, it's being in the trade and waiting. That is the only solution that I have as a trader. Goodbye, guys. See you tomorrow.